Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, we're going to talk about velocity banking. So, all velocity banking is a debt payoff strategy where you use your line of credit as your main operating account. And let me tell you something, once you pay off all your debts, then life almost becomes on easy mode. And in fact, it becomes so easy, it'll feel like you're making so much money that you don't even care about money anymore. And a lot of people think that, oh, as you become rich, you become more focused and obsessed with money. That's actually not true. In fact, it takes a lot of discipline to care about money as you become richer. So think about this, okay? It's kind of like if you live in a country where there's a ton of water and you devote your life to water management and conservation, right? It's very hard to want to devote your life to that when you have a ton of water. Or the same thing with money. If you have a ton of money, very hard to think about how am I going to manage my money and my resources, right? And so once we get to a point all of our debt is paid off, we're kind of like, oh my goodness, I make so much money, I don't even care about it. And that's how I feel right now, right? And there are a lot of people who make money but are broke, right? So if you just kind of look here, six figures paycheck to paycheck, tons of articles about how families living over 100 making over $100,000 living paycheck to paycheck. This is an interesting one. It says about a fifth of US households that earn more than 150,000 a year are paycheck to paycheck according to CNN, right? Lots of articles about this. So just making a good salary is not enough, and because I think people don't have the discipline to focus on the money when they have the money, that's why they struggle, right? But once we pay it off, we'll be good. And that's what we're going to do today, velocity banking. So, what is velocity banking? It's a debt payoff strategy. Simply deconstructed just means that you throw all your money into debt whenever you can with the help of something called a line of credit. All right, so let's get started. Two things that we need to do for velocity banking. Number one is a budget, which I've already done for you, income, expenses, and then your leftover savings is what your average American does after they pay their bills because it's a responsible thing to have your savings. And then we have our expense breakdown right here. Okay. So remember, when we do our expense breakdown, we have to list every single debt that we have, every single debt. And you won't believe how sometimes I get random spreadsheets from random people with their budgets and it's still a mess, right? Just make it clean and easy to read, okay? So every single debt that you have and then you have your food, gas, insurance and all that other good stuff in the same bucket, that's not a debt. So all debts go into each their own line item and everything that's not a debt it goes here. Okay? And then what we're gonna do is, with velocity banking, we're gonna have pretty much the same situation, but here's the scary part that most people are afraid of is that we're not gonna save any money. Okay? We're not gonna save any money because we're throwing all of our money into debt, but we will have something called cash flow, which will essentially be our savings, right? It's similar, but it's not, right? I try to demonstrate it in this picture right here, but I kind of screwed up because in the beginning, your balance is supposed to be zero, and the ending balance is supposed to be zero. And I kind of screwed up this month, but it's okay. It's okay. I got enough money, and that's what I mean. Like you make too much money, you don't care about it, and then next thing you know, all your money is going to debt payments, right? So, all right, let's go ahead and get started. So, here's the second step. We need a line of credit. A line of credit. We're going to use it what we call as our main operating account. So, what does that mean? We Whenever we get paid, all of our money goes into a line of credit, and then whenever we need to pay for something, we take out money from the line of credit, right? And so, here's the unrealistic part. We're going to assume we have access to a free and clear line of credit, right? Free and clear. And I have over $570,000 in lines of credit, 575, I think, right? This is just one line of credit that I have. One line of credit, $280,000. My home equity line of credit, but I got like a 15 grand line of credit here, another 15 grand line of credit there. I got, a gajillion credit cards, right? I got a gajillion credit cards. Is that even a real number? I don't know, but I'm just gonna say I got a gajillion credit cards, okay? And with the credit limits combined, that's $575,000 in lines of credit. And if you want to know what's my credibility in teaching this subject, I don't know. Probably nothing. No credentials other than I got a mortgage paid off under 3 years. But for some people that doesn't count. Okay, I just kind of flashed this my Lamborghini in my garage. People are not pressed. I get it. I get it. Maybe you're doing better than me, right? I know people who do better than me. I know a gentleman who has $2 million in my checking account. I get it. I'm not there. Maybe I'm not credible. Okay, I get it. But I still did pay off my mortgage into 3 years. Okay, so let me just kind of quickly glance over this. And again, for this demonstration, we're going to have access to a $90,000 home equity line of credit. Okay, again, a line of credit is a credit card. A line of credit is a financial tool where you could borrow money, pay it back, and use it over and over again. But not all lines of credits are credit cards, right? Or I don't know if I'm saying that right. But there's personal lines, home equity lines, business lines. They got all kinds of lines, right? And you know what's really crazy? Before I get started, let me just say this. You know, there are a ton of people out there, and I'm going to tell you why they can't um, focus on their financials is because as kids or just in society in general shamed us. We were ashamed of thinking that focusing on money is a bad thing, and it's actually not, right? You know how many people there are in this world who are obsessed about like working hard to go to college, pulling all-nighters, or working very hard at their job so that they hope to get promoted, and there's nothing wrong with working hard, okay? But when you ask them to care about money, they'll be like, "Oh man, I don't care about money." Like that's so weird. I know the reason why you're working hard is because so you can make more money, but then when I ask you like, "Do you care about money?" like they won't admit it. Is that weird? I think that's weird. In fact, let me ask ChatGPT this so I know I'm not crazy. In fact, I use ChatGPT as my kind of semi-therapy device, kind of like the CEO of Salesforce. So I just always ask, if I'm crazy or not. Am I crazy, or does it seem like people work very hard to either go to college or get a job, but act like they are not interested in making money, right? Let's go ahead and do that. Right, right. I'm not crazy. Thanks, ChatGPT. Let's go ahead and play the response.
You're not crazy. What you're noticing is a common paradox. Many people are conditioned to follow traditional paths like going to college or getting a job, often without fully thinking about why they're doing it beyond societal expectations. Making money might not be their explicit focus. Instead, they might see it as a byproduct of doing what they've been told is the right thing. A few potential reasons for this behavior. 1. Cultural conditioning. Society often emphasizes the prestige of education or career titles over financial literacy and wealth building strategies. People pursue these milestones for validation, not necessarily for financial gain. 2. Fear of being greedy. Many are uncomfortable openly admitting they want to make money, as it might conflict with societal ideals about humility or altruism. 3. Lack of financial education. Schools and even families rarely teach people how to think about money strategically. Without that knowledge, people may prioritize stability over wealth. 4. Avoidance of risk. Pursuing financial independence or wealth often involves stepping outside the comfort zone, which can feel risky or uncertain. You seem to have a clear mindset about playing to win financially, which can make this apparent contradiction more noticeable to you. Do you find this mindset is something you try to encourage in others, or does it feel like an uphill battle?
Feels kind of like an uphill battle to me, to be honest. But I'm not going to ask any more, or I'm not going to respond to ChatGPT so that we don't take up too much time. But it's very strange how people are. They work so hard for their job or to go to college, and then you ask them, hey, you want to make more money? Like, no, no, man. I'm like, what? But we're gonna make more money or increase our cash flow by paying off this debt. So it's like making more money without making more money. All right, so let's go ahead and get started. How much credit card debt do we have? It says 27 plus 35 plus 10. That's 72,000. So this is the most unrealistic part because if you try to get a line of credit here and it's free and clear, at this stage, no bank is going to give it to you because banks don't lend money to people who need it, right? People say that doesn't make sense, and again, I don't care if it makes sense or not. You need to memorize it. You need to memorize it, right? How do you think I have over $575,000 in lines of credit? I just memorized it, kind of like the Pythagorean theorem. Okay, I know it doesn't make sense. You're probably thinking of bank like a restaurant, but they're not a restaurant. They only want to work with low risk borrowers because have you ever tried to borrow like, lend money to people and then they didn't, like, pay you back? Probably they didn't pay you back because they needed money, and the bank as an institution knows that, so they said, "Well, we're not gonna lend money to people who need it." What they hope is that you make some decent money and you're just kinda bad at managing your debt. That's what they're really hoping for, okay? So, let's go ahead and do this, and we just did a balance transfer of these credit cards to the line of credit, and so let me go ahead and show you how this works. So the final step is you put your entire $6,500 into the line of credit. You take your expenses out and then you rinse and repeat over and over again, right? That's all you got to do. Okay. So let's go ahead and do this. H2 minus 2805.23. So to get the next month's balance, it's the previous month's balance, previous month's interest minus our cash flow, right? And then what we do is we take the average daily balance. And again, don't try to understand these formulas, but it's better to do it and then understand later. 0.08 and divide by 12. Interest rate, calculated annually. Interest is actually quoted annually, I'm sorry, but it's calculated monthly. Okay. So now all I got to do is just copy and paste, right? Copy and paste, copy and paste. And you see how easy that is. And wablam. Okay. 29 months to pay the whole shebang. You ever been to like Boiling Crab? It's probably more than 10 years since I've been to Boiling Crab, but they got this thing called the whole shebang. And that's probably what I'm thinking about right now. In fact, let me just do a random detour. And this is if you're from Southern California or California in general. I think they've expanded to other states. Whole shebang. You see that whole shebang? So if you've never been to the Boiling Crab seafood joint, whole shebang. Where is the Boiling Crab? Where did they close that? I hope they didn't, because I remember last time it was popular. Yeah, the boiling crab. That's what they got. That's what they got. They got some Vietnamese. I haven't eaten this stuff in ages, but I remember when I used to eat it, this was like crack, right? Where's my whole shebang? Right there we go. So again, if you're interested, I wonder what states. Sorry for like doing a detour. Now I'm like kind of getting sidetracked. Southern California, Northern California, Texas, international. Oh, these guys are Hollywood now. All right. So, all right. So let me go back here. Yes, but we did pay off the credit card of the whole shebang. 29 months. So 29 months. And then this is going to be 72K to pay off credit card debt. Look how easy that was. You see how easy that was? Oh my goodness. Okay. So now let's go ahead and then figure out, because we got two auto loans and a mortgage, right? So all we got to do is just put in the numbers in our loan calculator. So let's go ahead and do that in our loan calculator. And I think this is just the same thing. Did I do this right? Okay. Yeah, I think it's the same thing without the student loan. Okay, cool, cool. So let me go ahead and do this. And then all I got to do is put in the current month. Okay, so what's the current month? It's 29 months. So 29, 29, 29, right? And so now, okay, what we do is we take these two auto loans and we could put them in the line of credit, and then we greatly increase our cash flow. Now, why are we doing these two auto loans instead of the mortgage? Because I know people love to focus on the mortgage, right? But the mortgage is the debt we have to pay off last, because here's the thing. In order for me to get this $843, I got to pay $189,000. That's not enough bang for my buck in terms of cash flow. Let's get our bang for our buck, get about $800 here, and then we only got to pay 23 grand for that 800 something bucks, right? I think it's almost like the same like payment amount. Oh my goodness. So that's why we take these two loans. So this is going to be G2, G3 plus G3. Okay. So that's 24 grand. And we're going to move that 24 grand into that line of credit. So let's go ahead and do that. And then we're going to do this plus 24677.25. And then what happens when we move those two loans there? Then it's like, well, blam, 0, 0, right? And now our cash flow is over 3 grand. Ho, look how easy that is. All right. So let's go ahead and copy and paste. And then we're going to copy and paste. And then minus 3656.79. And then we're going to copy and paste here, right? Copy and paste. And then 36 months, 36 months, it's all paid off. So 3 years, okay? So in 3 years, we paid off all three credit cards and two auto loans. Look how easy that was, right? And I know I gotta keep saying that, but maybe it's because I'm a master at my craft, master of the 1,000 kicks, or is it 10,000? I can't even remember anymore. All right, so 72 plus 25 plus 20, $117,000. Okay, and then now it's time to focus on the mortgage. Okay, we don't focus on the mortgage first because we don't get enough bang for our buck for focusing on the mortgage first. Okay, so let's go ahead and go back to the loan calculator. After 36 months, how much do we pay, or how much are we paying? So right now we have $187,000 balance left, and then in order to pay it off, we can move it to line of credit, but it's not recommended, or I don't see any value in it to do a first lien HELOC. But we can still pay it off easily by doing what we call the chunking method, right? So now what we do, okay, is just kind of do a quick comparison, okay? So how long did it take us to pay off? What is that? 200 minus 187. Let's just do this. 13K of debt in 3 years, right? 13K of debt in 3 years. Let me copy and paste this. 13K in 3 years, right? That's how long it took. Okay. So now let's just move that 13K into that line of credit and see how long it'll take to pay it off. So let me just do this plus 13000. Okay. Oh, look at that. It took 3 months, 3 months or 3 years, right? So that's just what we call the chunking method, where we just move pieces of the loan into a line of credit. That's all it is, right? And so luckily we have this velocity banking calculator. Let me go ahead and pull it up. All right, here we go. We pulled out our velocity banking calculator provided by Renatus. And if you don't know what Renatus is, I'm just going to make a quick plug for it. It's where I originally learned velocity banking from, and they provide this cool calculator here. So if you're interested in upping your game, right, not only learning about velocity banking, but learning about financial literacy and real estate investing, click the Google form link below, right? Now, here's the other thing too. Full disclosure, I need money, right? And as you can see here, I definitely need your money because I'm a greedy person. No, I actually don't. But full disclosure, I do get a commission off of any sale or product. And I know there are people out there, right? There are two types of people. One, they like to kind of act like they want, you need to prove to them that you need it, like prove to me that you're better than your competition. They're those types of people. I don't play with that. Either you need it or you don't. Okay. And then there are other people who don't want to pay you because they resent that you make money. That's kind of like the struggle of the history of time, right? So, if I say it's really weird how people will hold it over your head if you need money and then act like, well, you're just doing this because you want commission. And then once you get to a point where you make too much money, more than you ever need, people resent you for making money. So it's like you can never win the people. But whatever, full disclosure, I do make commission off of sales of product or service or something. I don't know. but I do get a 1099 for this stuff, I think, if I recall correctly. But my point is this, okay? This quote calculator, it just spits out numbers. It spits out numbers, and I don't even have to think as long as I put the numbers in correctly. Okay. Now, here's what we don't want to do. We don't want to move all of our money into the line of credit. Why? Because it takes longer and it moves I'm sorry, the interest pays much more than we have to, right? So 4.1 years, which is pretty good, and 33 grand, but why not just pay 11 grand and in 3.7 years, right? I don't know what's up with the internet, but people will be like acting like these first lien HELOCs are a godsend, but they're not. You could just use a lien HELOC. In fact, it's probably much easier to get a second lien HELOC than do a first lien HELOC. You see what I'm saying? But anyways, let me go ahead and do this 3.7 years and just, we're almost done. I can't believe it. 36 divided by 12 plus, was it 3.7? 3.7. Ooh, 6.7 years. 6.7 years debt free. Debt free. Okay, 6.7 years. 6.7 years. And now this is zero. And then wablam, $4,500 in savings every single month because we don't have any more debt. And then this is where, I always talk about rich people problems, right? Your problems don't go away, but it's just what side of problems do you want to be on? What side of the fence? Do you want to be poor people problems where, you're going to be evicted or, you can't pay the rent and you're going to be foreclosed and you can't go to sleep at night? Or do you want rich people problems where it's like, I got too much money in my savings account and it's like, man, I really should invest in something. You ever notice that there are so many people out there? Well, I don't want to say so many people out there, but a good number of people out there where it's like, I don't know what to do. I got $100,000 in my savings account, right? So those people could be a potential source of funds who, if they want to, maybe investor, money lender, or I don't know, maybe you don't need their money, and maybe you're like me, where it's like, well, I would love to borrow your money, but I got too much of it available for me in my home equity line of credit, right? Here's the thing. I remember back in the day, people were telling me like, "Oh, money's not the issue. It's a real estate deal. There's money everywhere." I was like, "What are you talking about?" And now I'm like, "Oh, money's everywhere, but deals are hard to find." Okay, I understand now. See, a lot of you be thinking like, "Hey, I can't do real estate investing because I don't got no money." And again, money is an impediment. It doesn't have to you do need money, but it doesn't have to be yours, right? Now, if you have easily have access to money, it's even fantastic. But again, money is not the issue, right? It's about management, control of money. It's about finding deals. You increase your money base by strategically using it rather than being what we call a lottery winner, right? Too many lottery winners who they have too much money and then they go crazy, right? Or dead in 5 years, right? Don't be like that. Okay. All right. Well, that's it for this video. Who knows if I'm going to crank out another video for today's Korean Atlanta mentorship. Again, now we're at a point in life where we make so much money that we don't have to care about it, right? Rich people problems. All right. Have a great day.